Good morning, everyone who is joining us. Alrighty. Well, Lou and everyone, I will begin our webinar just so we can make sure we have enough time for questions at the end. Hello and welcome to Employee Retention Tax Credit. I'm Eileen from the Maricopa SBDC, and I will be the facilitator for this webinar. I will be monitoring the chat throughout the webinar. So if you have any questions, make sure to put them in the Q&A so that they do not get lost in the chat. As everyone is joining us, would you all please introduce yourselves in the chat? We will now be having our SBDC business analyst, Lou Farina, give us an overview of the SBDC. And thank you everyone for joining us.
Thank you, Eileen. Good morning, everybody. Eileen, I'm going to share. Let me know when I can share my slides. Okay. Share. Can everybody see that? Yeah, we're good?
Yes.
Okay, so good morning, everybody. Lou Farina from the SBDC here. Welcome and thanks for joining us. We've got an exciting program here. We got some content experts that are going to be able to talk about the employee retention tax credit. For those of you who I don't know, this is me. I'm an analyst here, and I'm going to be the host today, which means I'm going to talk about the SBDC and then close the program, but in the middle, handing it over to our experts. So let me just, on an introduction, again, this is an employee retention tax credit. It's going to help you figure out if you can qualify and the steps for getting the ERTC refund from the IRS. I will tell you or share that, working with many small businesses at the SBDC, there's a lot of interest here, and there's not as much awareness as we'd like. But even for the folks who have awareness that come to us, this is fairly complex. And as SBDC counselors, we don't necessarily have the expertise to really provide the depth you'll need to do this recovery. So we are really fortunate to have resource partners and experts that we can work with to refer to you, our SBDC clients, because this is a really interesting and very important program for you. So let me just tell you about the SBDC real quick. This is our 5-minute infomercial. So the SBDC is part of the America's SBDC Arizona network. So it's a state, we're a state organization. The SBDC is a national organization. So there are SBDCs in every state. We are here of course, in Arizona, and I'm from the Maricopa Center. We're broken down by geography. There's 10 different centers here in Arizona, Maricopa. But if you go to Flag or Sholo or Yuma or Prescott or some of the Mojave, there's other centers and other resources available to you. We are a no-fee service, prepaid by your tax dollars. And we're enabled by grant money. We receive a substantial grant from the SBA. Though that grant is matched by the Maricopa Community College District at the state level. So there's state and federal funds. We've got a couple partners also, the Arizona Commerce Authority, as well as the city of Peoria, who directly funds some specialized focus for their area. So what do? Well, we've got some areas of expertise, and at the top here is disaster loan assistance. And I joke because 2 years ago, we didn't even know what disaster loan assistance was. And I think at some point, this is probably going to move to the bottom of our list, but we've done a lot here. You probably know us. We've helped folks with EIDL loans, with PPP, and just general navigation through the pandemic of some of the monies that were available. But more traditionally, we do lender readiness. So folks who need loans, whether SBA or commercial, we've got a banking specialist who can help you prepare for a lender engagement and increase your success of obtaining your loan. On the business side, we can do financial reviews. We have resiliency assessments. We've got some marketing expertise. We've got some expertise in buying and selling businesses, exit strategies, manufacturing, technology commercialization, which is actually my a specialty doing a lot with early stage technology companies here in Arizona. We've got some specialists in export and international trade for folks who are doing exports. And we've got a sister organization called PTAC that specializes specifically on government contracting. So we've got a lot to offer. We do it in 3 different ways. One is counseling. So that's one-on-one counseling. That's you get assigned a counselor as a client, and we work with you through all stages of your business. You could be just starting your business. You could have an idea. You could be in the growth phase. You could even be on the downside or the exit phase of your business. So it's a one-on-one relationship, confidential, and it's no fee. We do training, and this is part of our training series. We used to do workshops. Now we do a lot of Zoom. We're probably going to go back to do some hybrid or some workshops soon. But we specialize in different areas. If you go to our calendar, you can find the different areas. And then really kind of the third thing we do is resources. So we've got some tools and resources that we can utilize for our clients. They're commercial tools, but we buy a subscription and we can provide them to our clients at no fee. There are things like LivePlan, which is a business planning software. We've got some market research available, Vertical IQ, iBiz World, and some others. So there's some really good resources we can bring into the counseling sessions to be able to help our clients. I think that'll do it. Let me just do a quick introduction here to our experts. We have Cheryl Paul on the line. And she is with Your Investment Solutions locally here. She's also a team member for Tax Strategy Pro and has a background in the financial industry as a financial advisor. We've also got Jeff Molman. I get it right, Jeff? Gotcha.
Yep.
And he's with Tax Strategy Pro also. He's out of Ohio, I believe, this morning. And he'll be assisting and working with Cheryl on this particular area. Both have deep expertise in the recovery of the tax credit, and I'm going to hand it over to them and let them take it from here.
Thank you, Lou. I'm really excited to be here and to be able to share this with you. There are so many small businesses that have so many myths and either haven't heard about the employee retention tax credit or have maybe possibly been told by their CPA that they don't qualify. And we deal with people like that all the time. Can I share my screen, Eileen?
Yes.
Okay. I'm going to quick play a little video here. This is a little 8-minute video. And while I'm pulling this up, if you guys want to text me, my phone number is 480-405-7779 and text ERTC to that phone number, and I can send you a copy of this video, which it's great to watch once, but you probably want to watch it a couple times because there's a lot of great information in here. So I'm going to play this video and then we'll go over some questions and answers and see what y'all think.
Hey there. As a business owner, you know all too well the impact COVID-19 had on the economy.
You're not sharing the video.
Oh, it's not sharing?
You know about the PPP or Paycheck Protection Program loans the government issued to thousands of businesses to help. But what most business owners don't know, the government also created special credits. Think sizable checks sent directly to you, the employer, to help businesses affected by the COVID-19 pandemic. They're called ERTC or Employee Retention Tax Credits. And in this video, you're going to learn how you can check to see if you qualify for them. And just a little hint, way more businesses qualify with the new changes that just went into effect than ever before. And you also learn how to calculate how much you're entitled to.
Sorry about this.
Common myths about the ERTCs. They cost a lot of business owners a lot of money. And toward the end of the video, I'll also tell you where
I'm going to pause it and go back.
you can get.
Is it sharing now, Jeff?
Help to make
Yeah.
sure you qualify
Okay.
for
Sorry about that.
and complete the forms to get you a check in the mail from the IRS as quickly as possible. But first, what is the ERTC and how did it come about? In short, it's a fully refundable credit against the employer's portion of the Social Security tax paid to employees. If you're eligible, you receive as much as $28,000 per employee in the form of a check sent directly to you. And the ERTC was created by Congress through the CARES Act back in March of 2020 to help businesses navigate through COVID. But here's where things head south real quick. It's been modified and amended 8 times. That's right, 8 times since its inception. And 3 acts have been combined into one along the way as well. So as you might imagine, this has created an enormous amount of confusion and misinformation that's costing business owners tens or even hundreds of thousands of dollars in credits that they're rightfully entitled to, but they aren't claiming. Here are just a couple examples of what I mean. Myth 1, if you've taken the PPP, you're not eligible for ERTC. This is just false. It's true that when the ERTC started, companies had taken the PPP that had taken it didn't qualify for ERTC, but not any longer. Thanks to some legislation back in December of 2020, the doors have now been opened to those who claimed the PPP loans back in 2020. So now businesses can apply for the ERTC even if they took the PPP. How's that for a bunch of initials? All right. Myth 2, the only way to qualify is if you had a decline in revenue. This is no longer true either. In the beginning, before the changes, this was the case, but now a business qualifies either a decline in revenue, more specifics on that to come, or a full or partial shutdown, as explained as follows. Okay, so here's how it works. A partial shutdown could be supply chain interruption, limited capacity to work, inability to access vendors or work sites, etc. Keep in mind, partial shutdown events could still be affecting businesses today, even if the shutdowns happened in 2020, such as supply chain interruptions still creating a backlog, for example. Now, other qualifying factors would include full or partial shutdowns, interrupted operations, supply chain interruptions, inability to access equipment, limited capacity to operate, inability to work with your vendors, reduction in services or goods offered to your customers, decreasing cuts in your hours of operation, shifting hours to increase profits, etc. I know some of those are repeated, but now that you know what the ERTC is, now you need to know if you're eligible. And to figure that out, you got to ask yourself 2 questions to determine whether you can claim the employee retention credit. First, did you have a significant decline in gross receipts 2020 or 2021 from the reference quarter in 2019? If so, was it 50% or more in 2020 or 20% or more in 2021? Or 2, did you have a full or partial suspension of services due to a governmental order related to the COVID-19 pandemic? Let's dig into each one a little bit more. First, comparing 2019 to both 2020 and 2021 by quarter, did you have at least a 50% reduction in gross receipts in 2020 for any quarter? And or did you have at least a 20% reduction in gross receipts in 2021? Again, compared to the same quarter in 2019 for any quarter. The answer to one or both of these questions is yes, then you're an eligible employer. If not, then the other option is you must have a governmental order related to your services. That could be state, local, or federal governmental order. And it must have caused a full or partial suspension of services. Now, this can be a nuanced analysis, and there's very good guidance in Notice 2021-20 and 2021-23 provided by the IRS. It gives you an indication for what the IRS is looking for when you're thinking through whether you've had a full or partial suspension of services. So just get your IRS handbook out, you'll be fine. That's our job, sorry. Just a joke. A partial suspension could be supply chain interruptions, interruption of business, limited capacity to work. Again, we talked about some of these: reduction in services and goods, inability to access equipment, inability to work with vendors, etc. So that's how to know if you qualify and are eligible. Now, if you are, here's how to figure out what your qualified wages are. The ERTC is calculated off of qualifying wages that you pay to your employees. First, note that if your organization received a paycheck protection loan and applied for loan forgiveness, payroll costs that you used in your PP loan forgiveness application can't be used as qualifying wages for the ERTC. The ERTC is a refundable payroll tax credit, up to $5,000 per employee for 2020, and up to $10,000 per employee per quarter, with a maximum of $28,000 per employee that can be claimed. Now, obviously, depending on your situation, that could add up to a lot of money that you're entitled to. And I'm sure you don't want to forfeit it or just let the government keep it. After all, it's your money. Now, at the beginning of this video, I told you that I'd give you some more free, customized help with getting your ERTC money. And that's where tax strategy programs in. Let me explain. We have a fast, simple, free process we go through to not only make sure you're qualified, but also to maximize your credit, complete the forms necessary to get you a check in the mail from the IRS as quickly as possible. We've tried to keep things simple for the purposes of this video, but there are many other considerations and exemptions, including what constitutes qualified wages, how to calculate health expenses, what documentation the IRS requires for this very beneficial and wide-ranging refund. So to kick things off, we'll have a quick discovery call. On this call, we'll learn a little bit more about your business. We'll get some more information from you about your specific situation. Then you'll receive a field estimate showing the expected recovery amount, if applicable. Don't worry, there's no risk to you at all because there's no charge if your business is knowledgeable. After that, you'll complete the required application and engagement paperwork, and we'll get you set up with one of our experts who'll determine which quarters to apply for. Then once we have all the info we need, we'll fill out all the paperwork, all the forms necessary, and send them to the IRS for you while you sit back and wait for the check to come. So if there's a See If I Qualify button on the page you're watching this video on, go ahead and click that to kick things off. If not, contact the person who sent this video to you to be guided through the process every step of the way and get the money you're entitled to.
Great. So like I said, if you would like a copy of this video, you can send me a text at 480-405-7779 and just text ERTC and you will get a copy of the video. Does anybody have any questions just to start off with? As you can see, it's a pretty complicated process and a lot of people have a lot of situations. Their CPAs will actually, let me put the number in again. Perfect.
So some of the questions we've been getting, if I can
Go ahead,
chime in here, some of the questions we get a lot are, how does this program differ from the PPP? The first thing about that is the PPP was a loan, so you're actually borrowing money, and some of that loan was forgiven, some people it was not. This is an actual recovery of your money. So this is, Congress has come out and said, yeah, you can stop the screen share, if you would. What Congress has come out and said numerous times is that the ERTC is a tax credit recovery, which in their eyes is your overpayment in taxes coming back to you. So when you get an ERTC recovery, you get a letter ahead of time saying, from the IRS saying, this is a summary of your estimation of overpayment in taxes. Here's the amount of check that's going to come for this quarter, this quarter, this quarter, and the interest that we're going to pay on that. And then you'll get a check in the mail for each quarter that you filed for and qualified for. So you don't actually you don't get a refund based on your taxes, based on your payroll taxes. So there is you're not going to have to amend a tax return. It's just your 941s that we amend. So we get that question a lot about what's the difference in that. I'd say the other big question we get a lot of, Cheryl, you especially get these questions about is, if I know of or am associated with a nonprofit, is that something that they can take advantage of? I heard it both ways. Some people say you can, some people say you can't because they don't pay taxes. And ironically, that's one of the ones that I get concerned about most. And I know Cheryl does too, because there's a time element in this. Once you have passed the time element, when there's a 3-year window to file for this after the last quarter. So, from the second quarter of 2020, you have until the end of the second quarter of 2023 to file for it. And nonprofits, churches, organizations like that have W-2 wages, they qualify. And we've seen some very, very large tax credits come out of our calculations. And these are organizations that if we're going into a recession right now, they have to have this recovery. Otherwise, and we know in recessions, unfortunately, a lot of people stop donating because their portfolios are down and there's a lot of uncertainty. And these organizations need these type of things to keep going. Sure, I know you've helped quite a few of those organizations, if I remember right.
Yes, I have. But there's a lot of businesses out there that are qualifying, restaurants, anybody that has had any shutdowns at all. I'm dealing with a steel company that they've made more money. They're like, we don't need the money, Cheryl. We've made more money in the last 2 years than we've ever made. And they have about a $2 million return coming. I'm working with a couple preschools, and they're like, we've been busier than we ever have, and we've made more money. But you have to remember there's two qualifying situations. Either your revenues have decreased, and then you definitely qualify, or you've had to have any shutdowns. You've had supply chain issues. You've had to change the way you're doing business, such as working from home, doing Zoom meetings. Most businesses qualify. There are a few businesses out there that don't, but that's where we're the specialists, and we can help you walk through that and find out. We have no charges to see what we can do for you. And if we do end up doing work for you, it's a 20% contingency fee, but that's not paid, that we do all of our work before we get paid for anything. So we can do an estimate for you just to see where you fall. I have one guy, and he just can't believe it. He's a very small business owner, and he's getting $100,000 back. He's like, Cheryl, this is going to make a huge difference in my business this year. And that's what we're all about, is helping you guys find the money out there, that this is actually your money. The PPP loan was a loan. This is an overpayment in payroll taxes. This is something that is yours. And when you get this money back from the IRS, you get it back with interest. And we all know that the IRS isn't going to pay you interest on money unless it was yours to begin with. So this is your money. You just need to go out there and work with the right people that can help you get your refund.
Mm-hmm. I look at it like a child tax credit. So I've had a number of instances. I'm a certified tax specialist, and I've seen a lot of these cases where the calculation was done very conservatively. This is not something you want to be conservative on, because it's very cut and dry. It's black and white. If you have payroll, if you have W-2 wages, it's based on that. The calculation is that something has to be done by people that have the knowledge on how to do that. We have a very sophisticated system that creates our estimates for us, and we have an underwriter that works on those. But you, with a child tax credit, if you have 3 kids and the tax credit's $2,000 per kid, you don't want to file a $4,000 tax credit just to be conservative and not get too close to the full credit. You would apply for the full $6,000 credit, of course. And this is the same thing, where if your tax credit, and our average tax credit that we have seen, and we'll do $1 billion in tax credit recoveries this year, and the average is about $359,000. It's a big number. And yet we have clients that come to us all the time. They want to know, I've had 3 different people look at my tax credit, and they all say it should be around $30,000, but your estimate says $208,000. Yeah, that's because it should be $208,000. Oftentimes, there's not enough errors and omissions coverage with those organizations doing the calculations, except for to cover what their calculation has. So just remember, this is a one-shot deal for you. If you get it wrong, Congress has said you'll be taking an intentional loss on your tax on your books for those years. In other words, you'll have intentionally overpaid. So we'll be glad to create an estimate for you. It's a conservative estimate, only because we're not using your actual documents until you have engaged with us. So it's going to be, give or take, 5 to 10% conservative, but it is something that we can take to the bank as well, knowing that now as we engage and we go through your actual documents, we're going to have the exact number, and that's what we're going to file on. And it's that plus the interest that as the checks are now coming in, and they're coming in every day by the hundreds of thousands to our clients, the phone calls we get are pretty awesome. So.
And another really great point too is when you work with our company, your return is 100% guaranteed. If you get audited, we will protect you 100% through an audit at no cost to you. We will protect the numbers you've given us, the work we've done. And that is huge because these are not, like Jeff said, we had somebody prepare a software program specifically for our business for this. We put in a complete department when this started, just to do ERTCs. There's a lot of companies out there that are just kind of doing it because they're using some kind of calculation. And if they can't prove to you where those numbers came from, if you get audited, you have to prove to the IRS where the numbers came from. And that's a huge liability on your side. And we take that all on because we get the documentation. The documentation isn't easy. It's stuff you have, but we want to have all the documentation. So if 4 years from now you were to get audited, we would be able to protect you 100% because we have the documentation. You're not going to remember, oh yeah, in June of 2020, I was closed until September of 2020. And if you were a restaurant, you were open for drive-through and this kind of stuff. And that's all the stuff that we pull out and put into our technical writers documentation, and that goes in your file, and that all gets pulled out if you do get audited. If you don't, well, that's okay. You know, we all buy insurance on our cars, on our houses, on our lives, and everything else. It's kind of an insurance protection for you, so, and for us, that we have the documentation that we can support it and we can protect you if we need to. But this is something you don't want to miss out on. I mean, there's millions of dollars, and the excitement to people when they start getting their checks is just unbelievable. And it's great to see it going back into small businesses in our own community.
Now, Estelle, you asked the question, and think of some other questions you guys have, because we've got a little more time to answer them. And we have a lot of experience in this. We have been doing this more than just about anybody since the beginning of this. And that's just simply because we already did a lot of work with R&D tax credits as well as proactive tax planning, because that's what the heart of our business is. But Estelle, you asked, can my payroll service do this for me as they have all the information? The question becomes, can they do this? What you want to look for, whether, no matter who you go to, what you want to look for is you want to look for an organization that has the background of working with tax credits, not necessarily filing taxes or filing payroll. So payroll companies will have the payroll documents. They will have the information about what is needed for amending your 941s, but you want to look for an organization that has the background of handling a multitude of tax credit recoveries in the past, because there is a specific way these have to be done in order to cater to the IRS's requirements. But you also want to look for an organization taking an additional step for documentation, because at the end of the day, that's your best friend. So if you find an organization that's doing some maybe recorded calls with the client, with you, if they're doing reports on how you qualify, if they have a vault, they keep all of the working papers in where they use the documents they use to create the recovery amount. That's what you want to look for. So your payroll company likely doesn't do that, just from history, but yeah, that's because they do payroll, and most big companies stay in their lane because that's their bread and butter. This is a big one-off, and you have to know that what you're sending in is, if it's you and say just 5 other companies that are sending in your paperwork to do the tax credits, you're talking about a whole bunch of files that are going to be sent into this office that's going to be processing these. So you got to have an office that, they're very particular about the way they carry their documentation, the way they file it. Because if you got 5 business owners sending in 2 years worth of quarterly payroll reports and quarterly 941s, and then quarterly P&L statements, along with if they have group health, their group health statements by quarter and their PPP loans. Imagine just 5 companies, and how if all that stuff is thrown into an inbox all at once, it's a lot to deal with. So if they've been doing it for a number of years, they probably have a system in place. And I'm not talking about ERTC even, just tax credits in general. Other questions you guys have, just feel free to type away or take yourself off mute. So I understand everybody on here is business owners except the panel, and some of us are business owners. So I'll throw some thought-provoking mind shots to you. So if I'm a business owner, some things I'm thinking about are, first of all, I have payroll, I have W-2 payroll, and I have employees. Is my compensation counted? So your compensation does count as long as you're paid as a W-2 employee with the company. So that's kind of a big deal as well. Other questions we've had are, what if I use a PEO? So a PEO, a payroll organization that does HR work as well, you can file your recovery. There's some steps involved. And since we are a tax planning firm, we've got to look at how that works. So if you have a PEO, you go to an organization to do your tax credit recovery that has experience working with PEOs and also documentation, because there's another level of documentation you have to use when working with a PEO, because the PEO is actually going to file on your behalf. And then they're going to get some money back from the IRS, and they have to turn around and pay you. So there's kind of a 2-step process there. We end up doing all the paperwork for ours. So if you find an organization that does that, they'll do the paperwork for the PEO. They're too busy. But the PEO will have a form you have to sign. So don't be concerned about that form. It's just a form that protects them should you get your recovery and the organization you chose to do the tax credit recovery analysis did it wrong. And now 2 years later, the IRS comes back and tells the PEO you need to write a check because it wasn't supposed to be that number. And the PEO is going to come back to you to have you write the check. Or we're waiting to see if anybody has any other questions, other thought-provoking things, just things that come to mind. The question on fees, that their fees are all over the place. I see them, 20% is pretty common, but we've seen them down to 7%. I think it's watch what you wish for, because 7% fee can end up costing you 50%, right? It could be that they file your tax credit recovery, they don't get the right number, and say it's supposed to be $400,000, and they tell you it's $130,000. You're excited because it's $130,000, but it should have been a whole lot more. What's the real cost? So people that are price shoppers tend to get what they pay for more often than not. But we see it all over the place. It's kind of like the Wild West, where you just have to ask questions and know, you typically, right? If you've come to the right place by how they answer the questions, and you're a business owner. So, when you ask questions to somebody related to your business, if they know what they're talking about. You'll know when you ask questions that are concerning to you about the legitimacy of this. If you're going to get a $2 million recovery, you're going to know questions to ask, because you're going to want to know you're protected. But and I like that question from Jerry about referrals, because look, this is something, again, the IRS did a horrible job of promoting it. For the longest time, people thought it was a scam. I heard everything. The problem was you had Congress trying to promote it. The IRS was overwhelmed. So they didn't do anything with it. In February, there was an article in the Washington Post where the IRS commissioner said that one of the reasons they didn't promote this, they didn't want any more work. They said in that article they were 24 million returns behind for 2020. Literally, they didn't want any more work. So They actually have segregated this off into a whole separate section in the IRS. That's why they're getting processed fairly quickly now. But it's a big number. You can't miss it. If you're a business owner, you owe it to yourself to dig into this. You're not going to get a sales pitch from an organization that knows what they're doing. You're going to get knowledge and you're going to get answers to your questions. And at the end of the day, you'll know that it applies to you, because a good organization is going to have steps in the process. Like I've seen a survey that has questions on the very last page. It has a bunch of knockout questions or inclusion questions. Yep, you qualify. But then there'll be another step in the process as they go along that their underwriters can catch an organization trying to slip through the cracks that really doesn't qualify. And that's okay, right, Cheryl? Because if I didn't qualify, if my business didn't qualify for the employee retention tax credit, the last thing I want to do is file, because I know I'm going to get caught. That's going to happen then down the road. But it's pretty cut and dry if you qualify. And the number one qualifier we're seeing, Lou, is business owners that still are having difficulties with supply chain interruption. It's the number one thing we see right now. Is supply chain interruptions are still a huge problem. Everywhere I turn, I had a client that has 12 tropical smoothie cafes. They still can't get lids. And I have home care companies. What's their product? Their product is nurses and aides, and they still can't get them. How do we prepare for the credit? How do we know if we qualify? What 5 things should we know about ERTC? That's a really good question, Yolanda. So how you prepare for the credit, I can only speak for the systems I've seen. I've seen quite a few systems. So we like our system just because it's simple. It's a survey. You answer some questions on there. You need to know your payroll, your quarterly payroll, your W-2 payroll, number of employees, W-2 payroll, your PPP information. It's a quick process. You send that back. You get an estimate within about 24 to 48 hours. Typically, it's a 24-hour turnaround for that. Then you'll know if you qualify, because at the end of the day, we've seen enough organizations of all shapes and sizes, different types of organizations. We know who qualifies and who doesn't typically. And again, that supply chain disruption is just about the biggest inclusion, we'll call it, where people think they don't qualify. And then I just start asking questions about product, and boom, they qualify. But that's not everybody on here, I'm sure. What 5 things should we know about ERTC? ERTC, you got to know, it's your money. If you don't take the credit, we're going into a recession. You just got to ask yourself, we just came out of a COVID recession. We're going into another recession. How big of a problem is this going to create for you? Because you are in a sense taking an intentional loss on your books for 2020 and 2021. It's not a good thing to do. But you can also, if you've had to shut down one of your business entities, which we've had a lot of those. Somebody has they have 5 stores and they shut one down, but they left the entity open. You can still apply for ERTC for those quarters if your business was open paying wages during that time, even if it's not open today, even if you had to sell it off, shut it down. So the second thing would be about ERTC is it's a small business bailout, so to speak, but of your money. So what they've done is they've taken that pot of money Congress has, and they've set it aside. It's now part of the economy. With all the ups and downs and the roller coaster of the economy, inflation, everything's factored in. It's in the economy. So you must get this credit, because if not, it goes into the general fund for Congress. So unlike the PPP loans, 66% of eligible businesses applied for the PPP loan and took it. With ERTC, as of 2 weeks ago, we were at about 16%. So not enough businesses have done this. Another thing to understand is you've got to have your hat in there. You've got to have the process started in case they cut it off immediately. They can cut this program off at any time. They did it twice with the PPP loan. As long as you've got your name in the hat and you've got the process going and the 941's filed, you're safe. It's a 2 to 3 week process tops once you've started the process, as long as you've got an organization that has a system, because they'll be able to get everything done and get the 941s to you to sign and send in a short period of time. Another big thing to know is if you don't have the ability to pay the retainer fee for the work, a good and we'll call it an ethical company is not going to force you to pay it all up front. They're going to work with you. Why? Because you're getting this recovery back that's guaranteed. You're going to get that back. And so I've been telling business owners, Cheryl, for the better part of 2 years now, just get the credit. If you don't have the money to get the credit and pay for the recovery fee, work it out. It's coming back. It's a guarantee, but you as a business owner can't afford not to have that. It's your money and it's a big deal. It's about expansion. What can you do when you have that? Another thing, and let's call this the last thing, you don't have to put it towards anything in particular. The IRS and Congress has said this is a check or checks you get back. If it's 2 million, we just had a church get 7.7 million. They said, we don't want it. And I said, yeah, you do. They said, no, we don't want it. And I said, you give it back, then you're basically saying, we have our beliefs. We're going to give this money back, and you can, Congress, you can reassign our money to any organization you want. I said, is that really what you want? And they go, oh, wait a minute. No, I don't know if we support those other organizations. They're going to use it for all sorts of good within the community. As a business owner, you could put it into your retirement account. You could pay off your house. You could pay off your line of credit. You could bonus your employees. You could upgrade all of your kitchen supplies. It's whatever you want to do with it. You can sit it in an account for a rainy day, but there is nothing required that you do with it. The 3-year timeline to apply. I am keeping an eye on the clock here, though. The time to apply, you can go back and we can apply up to 3 years after the last quarter ended. So right now, the first quarter that ended was the end of June of 2020. So the end of June 2023 means we can't, after June 30th, 2023, we can no longer go back and apply for that quarter. So that quarter will be gone, and you'll have taken an intentional loss on that quarter if you didn't apply and get your PPP loan, or your ERTC credit. So that's a big deal. Time is on your side right now, but once we get past the dates in 2023, each quarter will be losing a quarter, and that will be gone forever. Can I apply for this credit without hiring someone or paying someone? I'm a super small business. Here's the question. You can do anything you want to do. Yolanda, you can do anything you want to do. The question you have to ask yourself is not, can I do this? You can do anything you want to do. If you get it wrong, what's the consequence? If you're a super small business and you get that wrong and you end up getting audited and you end up paying 3 times as much as you got for a credit to fix the audit, you lost. So at the end of the day, on a super small business, just like businesses that we work with that are nonprofits or businesses in general, just don't have the cash flow because look, we just came out of COVID. And so we understand cash flow completely. A good ERTC recovery group will work with you. So that's another way you can identify if they're reputable. They'll work with you. But there are organizations. This is the Wild West out there. You got to ask a lot of questions. You got to know you've come to the right place. So Yolanda, whoever you choose to work with, they will work with you because they understand your situation if they're reputable. That's for sure.
And also, Jerry, about the 3-year time frame, that 3-year time frame is not guaranteed because like Jeff was saying earlier, Congress can pull this at any time or they can change the requirements. And if they change the requirements and you do not have your 941 sent into the IRS, you will have to comply to the new requirements. So the 3-year time frame, don't get too caught up on that because that can change at any time. It can go down. They can stop it, or they can change the requirements. So don't wait because you think you're going to wait for the 3 years. And also there a lot of businesses are getting this money, and the money is dwindling away, and they've only got so much money set aside for it. And once that money's gone, then Congress would have to allocate more money towards this. So the 3-year time frame is just kind of a generic time frame.
Yasmin, I saw you asked, I started my business this year, can I apply for the credit? So the quarters ended, the last effective quarter you can apply for was end of third quarter 2021. So you wouldn't be able to apply for the credit if you just started. But if you are not in business anymore, you can apply for the credit if you left your business entity open and maybe closed your business but left the entity open, like your LLC. Then you can apply for the credit, absolutely. And especially if you know somebody who did lose their business or closed it during either during COVID or afterwards, you know, that would be, I've had many good conversations with people that their eyes light up because, you know, they went through a lot, and anybody loses their business or close it, they go through a lot. And to be able to see that kind of light at the end of the tunnel, you get a lot of smiles.
I think that's about our 45 minutes, right, Lou?
We actually had you scheduled all the way through 11.
Oh, okay.
So yeah,
Well,
I mean,
we can keep going then. I just didn't want to, I wanted to.
well, let me just check. Eileen, did we have the schedule to 11?
Correct.
Okay. Okay, good. All right, keep going.
Okay, perfect.
Yep, sure.
Does anybody else have questions out there? You guys have great questions. But sometimes it's one of those things you don't know what you don't know. And you were asked, somebody had asked the 5 things about it too. You know, if you were impacted by COVID in any way, shape, or form, you will more than likely qualify. So, you know, get with a reputable company, get with somebody that you trust, somebody that's going to have your back and be there to help you if you do get audited, because that's, like Jeff said, that's going to cost. If somebody's not there to protect you and you get audited and you can't protect your numbers, that's a really dangerous place to be.
I'm going to put your number up here again, Cheryl, in case people have additional questions.
Okay.
Since it's further up in the chat. I think there's another question too.
How does someone justify that there were not enough nurses? Well, basically all you have to do, I did a big one up here in Flagstaff, and they couldn't get nurses. I mean, to justify, I mean, your numbers will tell the story. If you're having, you know, we had some nurses that they quit working, they got burnt out, they got COVID, they didn't want to have the chance of possibly bringing it home to their family, so they didn't want to work anymore. And the numbers, you know, you'll have those numbers in your payroll.
Yeah, and it's one of those things too. It's like anything else when you're sourcing product. It's easy to see in a business when you're like some of the home care companies that I've worked with. You know, they have shifts they don't even hold anymore. You know, I have one that typically has 153 nurses that they contract through for home care, and they've had a top in the last 2.5 years. The max has been 83 that they've been able to get. So they, you know, the amount of care they're providing is significantly down. Obviously, they've been hit with revenue losses as well because of it. Ironically, they're still profitable because they're a very well-run company, but that's just, I mean, it's just one of many examples. It just, you could look at any particular business and look at, you know, the product shortages. You know, our country's been hit pretty heavy with those, but ironically, car dealerships were the one that shocked me about 6 months ago. It seemed like there was very few car dealerships even realized that there was an ERTC credit. And everywhere you drove, I mean, it's product shortages galore. So, but
And yes, Justin, you asked if you can watch the whole video later. Jeff put in my number 480-405-7778. And if you text me just the word or the letters ERTC, I will send you the video that we played. It's an 8-minute video and it's got a lot of details in there, and it's good to watch. Whether you work with us or anybody else, you can watch that video over and over and get the details in there. It's a really detailed video on the ERTC. You can always, if you want to do this yourself, you can go to the irs.gov and put in employee retention tax credit, and you can pull up all kinds of information. But it's difficult if you're not working with a specialist, because it's changed 8 times in the last year and a half. And, we've had clients that they wait around, and then by the time they went to qualify, they didn't qualify anymore. So it's not something you really want to wait around and say, oh, well, I'll just do this later. Maybe they'll make it easier, and maybe it'll go away. Maybe they'll run out of money.
Hey, Cheryl and Jeff, I just wanted to interject. We're recording this entire webinar also.
Oh, perfect.
And it will be up on our website, and we can send links to folks who ask.
Okay, perfect. Thank you.
Terrific. Yeah, we've had a couple of private messages too on the Q&A text box. That's really great, because it's something that's been kind of burning in me, because we have a lot of small family businesses in our family. Farmers, a lot of times farmers don't even think of themselves as a business, I've found. Dairy farms, I don't know what kind of farms you have around you, but
Cotton.
we have a lot of dairy farms, a lot of dairy farms, a lot of pig farms, and they have a lot of employees. And so, it's if you are somebody that works with other small business owners, as you guys do, or any other small business owner, I know a lot of small business owners that are coaches. Just think of those that you care about the most, and you can make sure that they understand there's an option out there, because many of them, they're just now finding out about it. So there's resources. Our 8-minute video can be a resource, but we've got a lot of educational worksheets on it. There's a really great piece we created in conjunction with the Treasury Department, because when this was in that flux period where people were like, I don't believe in this, there was a really great piece we put together with the Department of Treasury information on it, because you couldn't go to the IRS website and get any information on it. Literally, you couldn't. It was you'd go to the site, and there'd be a tan box that said basically they had no information on the tax credit. So it was very confusing. But our whole purpose in all of this is, we do a lot of education on understanding small business and taxes. And so this was just one of those things where we knew we had to get the word out, because Congress was trying, but the IRS was busy. It got to the point IRS had to be called into a hearing with the commissioner by Congress to get them to explain that they would take this more seriously. And yes, last month that meant checks started flowing. So it's really awesome. We went from our clients and other people we knew not seeing any recovery checks to, within a week, hundreds of thousands of dollars coming in to clients every week. So it's kind of neat. I had a farmer this morning call me and say that they got 5 of their 6 quarters of checks. So, but so another question that I have in your mind is, like, how quickly will we see our recovery checks? So we've seen them take from the very beginning, anywhere, if it was supposed to be a 2 to 3 month process, it was taking 8 months. And then we finally started seeing things flow. Now it's literally about a 2 to 3 month turnaround, sometimes quicker. But the key there is they have to pay interest. So as we learned about with the people where it took a while, the company's business where it took a while, they got interest on every one of those quarters and months that it didn't show up. So even though they didn't get their full recovery right away, they got a full recovery plus some. That was the neatest thing. After that congressional hearing, people started getting their letters from the IRS saying, hey, here's your overpayment and taxes recovery. And that's what the letter says. So it's absolutely you getting your money back. And it would have on there the quarter, the amount of credit of overpayment taxes, and the amount of interest. And so it's a rarity, right? Normally you pay the IRS interest, but now they're paying you interest.
And the question came up again, Jeff, as to whether a business needs to be open to get it. If you had to close your business, I believe as long as the business entity is still open, you can get the recovery, but it has to be open. If you sold your business, I'm working with some businesses that have been sold. The original business owner, from, so it's the last 3 quarters of 2020 and the first 3 quarters of 2021. So whoever was the business owner at that time will need to sign the 941s. But if you bought a business, or if somebody else bought your business from you, you can go back to them and possibly work out some kind of a deal. Say, hey, you know, you bought my business and I found out that there was this credit. Can we work together and split it? Or, you know, something like that. So there are different ways to handle it as long as the business entity is still open. Like some restaurants, I think Jeff had pointed to this too. Some restaurants, they had 5 or 6 restaurants and they went down to 2 or 3 restaurants. They're still open, so they can still claim that in the months that the ERTC is all based on your quarterly W-2 numbers. So if you could have 10 employees for the first 3 quarters, 20 employees, then 40, 50, 60, and then each check, you get a check per quarter for those 6 quarters. And it's based on the number of employees you had in that specific quarter.
Yeah, and to further make sure that's explained on the side of the business closing, because this is a question I get a lot. So it's not just that if you're a restaurateur, let's say, as example, it could be if you own a chain of carpet stores, but it doesn't matter if you had 5 restaurants, now you're down to 2, but you have at least 2 open. You could have had 1 restaurant, that restaurant went out of business, but you didn't close the entity. So your LLC has not been dissolved. You can still file for the ERTC recovery for that entity that closed because you didn't dissolve the LLC. And so there's a number of businesses out there. It's not on their radar. They're not thinking about it, but business owners know business owners. This is a big deal. It's probably the first time in our country's history we've had a small business bailout, so to speak, where it's not, this money is not going to the big businesses, to the banks. We got to take advantage of this because it probably will never happen again.
Yeah, I think the cap on is 500 employees, right, Jeff? 500 W-2 employees.
Yeah, it's 500, but if you have part-time employees, then 2 part-time employees equal a full-time employee in the IRS's eyes. And the other side is you might have a business that has multiple entities. Yeah, so like Cheryl said, per entity, you could have 1,000 employees, but you might have that split into multiple entities. I know a lot of businesses do that. Heating and air conditioning that also does plumbing. You know, they have 2 separate entities. They might have a whole bunch of employees, but they're split up differently.
I think we have time for one more question that Shiva just put in the chat.
Okay, Shiva, our business payroll has filed under a different tax number than our taxes. Does it still work? Yeah, we would. So that's a good question. So when we're doing the tax credit recovery, we would file it based on that FEIN number. So whatever payroll FEIN, so like a PO uses their EIN number for your payroll, actually. So, you know, we work, or anybody that does this is going to work with that particular EIN number for your payroll. Yep.
Okay, thank you. I think we're getting up on 11 o'clock. And so I can't share my screen, but I'll just, I want to thank you guys, Cheryl and Jeff, for participating today. I will say that, you know, as an SBDC counselor and having worked through the pandemic, we you know, our counselors have really relied on our resource partners for this particular program. And we're really happy to be able to provide referrals to competent resource partners to help our clients. So again, thank you. I
you.
think, yeah, I think Eileen will send out an evaluation at the end of this. I think you'll probably get it by email, everybody that's on. And so please let us know how we did, how you liked it. It helps us provide better programming. So Cheryl, Jeff, any last words?
Well, thank you very much. Reach out if you guys have any questions. You've got my number, and I can talk to Jeff if you guys have questions for Jeff too. But we're here to help you guys. It's small businesses are what make this country real.
Thanks, Lou and Eileen, for having us on. We appreciate the work you do with your community and all the small businesses.
Okay, thank you. And everybody have a good rest of your day.
Thank you.
Okay, bye-bye.
Bye-bye.
Bye.